A deal that would create the largest pay TV provider in the U.S. DirecTV will acquire rival Dish from EchoStar for a nominal price of $1 and just over $9.7 billion of associated debt on the business. Joining us now is EchoStar President and CEO Hamid Akhavan. And Hamid, it's great to have you here in studio. Thanks so much for taking the time to join us. So talk to us first just about the timing of this, why this is right, why this strategically makes sense for your business and for EchoStar.
Yeah, thank you. Thanks for having me here. Great questions. I mean, there are a couple of different angles for us to make this the right timing. First of all, I think from a financial perspective, we had some maturities coming up. We have always said we are a very asset-rich but liquidity-poor company in recent times, and now we address that in a very significant way. We needed to do something on that front in order to just open up the horizons for us. With all opportunities. The strategic angle of it is that, it's the right time for our content distribution business to kind of scale up. That industry has changed. It's a very difficult industry now. The programmers are going directly to the consumers, and the erosion of the satellite-based distribution. It has been very significant in recent times, and the only way to negotiate with the programmers effectively and bring better packages to the consumers would be to have more buying power. And I think this was the strategic right positioning for that corner of our business. And also, we have a very nascent and high potential wireless business and satellite connectivity business. And to feed that, we really needed to have focus and some financial power to do it, some liquidity. And I think this allows us to do that. Focus on where we think we can, create additional value and have the financial freedom to take advantage of that. And then also, put the content business, distribution business into a larger hand that can make it thrive again.
It feels like you're moving from one hyper-competitive area, though, right, streaming content distribution, to another. We know that the three major mobile carriers out there really are dominant in the space, right? What is your competitive advantage when you're going up against AT&T, T-Mobile, Verizon?
Yeah, so I would, first of all, I would say that, in the content side of the business, you're right, it's hyper-competitive. There's everybody has many ways to get content these days, and you guys know more than I do about that. But when it comes to mobile business, that is not as competitive as it might seem. There's only three players that own the entire mobile communication of the United States, right? I mean, there are many brands there, but there's only three networks before we showed up. Each one of them having 120 million, and we haven't seen the prices get affected in recent times, and there's a lot of customer confusion there. We think this country, being the largest IT and telecom country in the world, can afford to have a very solid challenger, and that's number 4, and we are there. And the other advantages we have is that we have a very fresh 5G, the only software-oriented, cloud-based, Open RAN network in the world. That gives us advantages in terms of cost in the long run, and also agility to bring things that like AI to enterprises.
So, I mean, given the factors that you just laid out there, a number of advantages that you see for your business, it doesn't look like, at least from the Street's reaction, that the Street is excited about this. We saw the sell-off yesterday, a further move to the downside here today. What do you think the Street is missing? And I guess just your reaction to the degree of that drop that we've seen.
Yeah, I appreciate that. This was a very complex transaction. By some accounts, the most sophisticated, complex, and large-scale restructuring, refinancing, and exchange, all in one M&A that in Wall Street's recent history. And so I think it takes a bit of time for people to unpack it. We have not even told half the story. And the other thing is people have not yet digested how important this will be from our strategic positioning perspective. They have not yet calculated that. So we're not really worried about that in the short term, but I think in time it'll take care of itself.
But Hamid, I guess the business has not struggled, but it's challenging, right? When you have three dominant players already within this industry. I guess when you talk about chipping away at that market share, what more specifically do you think that looks like, and that opportunity for immediate growth?
Yeah, I mean, one of the things that I've been saying is that, nothing is more dangerous than an underutilized or empty network. Like, for instance, today, one of the offers we have in the market, if you buy any of the phones that are on our website, anywhere from $300 to a full iPhone 16, you're going to get 1 year worth of service, no contract, no commitments, no tradings, no strings attached. Use it for 365 days and leave. We don't even charge you anything for it.
How do you afford that?
Well, I think that once people come on board and they see the benefit of being on our network, and we have a 99.9% coverage of the United States because we have our own coverage. We have coverage of AT&T and coverage of T-Mobile in addition to our own coverage. So when you look at that, they get the best coverage. They have, a great service we're going to give them, a digital experience that nobody else has, and we don't think they're going to leave. We think once they come on board, they're going to stay.
Some of the issues with the business with EchoStar in the past has been questions just about liquidity and the capital, whether or not you have enough. I guess from this deal, does that fund some of your investments or some of that opportunity for growth that you're talking about?
Well, certainly it funds us in the short to midterm horizon for us to continue to develop the business. We have had, this liquidity just showed up, so we are redoing our business plan right now. And also we had some great news from FCC in terms of trying to make the market more competitive and allow us to have a fair competition and try to reduce the prices and make the market dynamic, more attractive. And I think once you put that together, I think it gives us a significant runway to get our business developed. How much money does it take? Depends on how aggressively we really want to go in the market and take share or build sites. But clearly, we're going to meet every obligation we have to the FCC for the spectrum. That's no longer in a question. Clearly, we're here to fight, and we'll see how the market develops.
I want to end just with some context because obviously deal making has been under some pressure over the last couple of years. Just curious if you can bring us into any of those final conversations at the 11th hour. And just personally, I want to know, did Fed rate cuts play into this decision at all? Was there any mention of the Federal Reserve's path forward here?
Well, 11th hour was easy. 11th hour and 58 minutes was the one that was difficult, actually. No, this was intense pressure and activities, not just because the negotiations were intense, because there was exchanges involved, M&A involved, new debt raise, converts, pipes, and every instrument by different groups was involved to bring it all together in one sweep. So yes, there were a lot of sleepless nights. I think a lot of exhausted people, but we are happy that we could bring it all together. We use the analogy of 3 747s landing on the same runway at the same time without a crash. The Feds did have a play which didn't really help us as much because the rate cut came way too late for us. So we had some negotiations going on, and through the year I was hoping that the rates would drop so we could get access to cheaper capital during the negotiations. I think the Fed was waiting for me to sign the papers before they dropped. So everybody should thank me for signing that and making the Fed finally agree to drop the rate.
Hamid, real quick before we let you go, the regulatory aspect of this approval, where do you sit on that? Just the confidence that it's going to happen?
We're very first of all, we never want to guess the important role and the decisions that the regulators have to make. So we appreciate however they decide. However, we are very comfortable thinking that there is no obstacles in our mind because the two companies coming together have lost 60+% of their customers since 2016. Today, everyone in the United States has access to broadband, and through broadband access to your content and everybody's content through Starlink or through landline. I think the attrition in our business just speaks to the fact that the market has choices, and the regulators actually want to have a stronger content distributor that can make the programmers offer smaller, more bite-sized, lower-priced packages to the consumers who are demanding it. So I think this will be a very easy decision for them. That's what we hope and expect.
Hamid, thank you so much for coming in studio to discuss the deal with us. We really appreciate your time.
Thank you very much for having me.
Thank you.